Prop firms are getting taken down. This is the mentality that you need to prepare for what's to come. We've seen multiple scenarios recently of large and reputable prop firms either being taken down, freezing accounts, or restricting certain clients from being able to use their service. So you have to understand that the prop firm industry is changing, and there are certain things you can do with your mindset and your psychology to ensure that you're prepared for whatever is about to come. Now, more recently, I've had multiple messages from clients and students with the recent prop firm situation. So what I wanted to share with you in this video is exactly how I'm advising my clients and students to handle this type of situation and what type of a mindset I'm encouraging them to have during this time. Now, the first thing we have to understand about prop firms is that, and I had a client reach out and say, you know, I've had my account frozen or I've lost this account. And my question here is, right back to him was, who's at loss in this situation? You see, there are so many traders out there who are minimizing themselves to a prop firm. They're thinking that the prop firm is the asset, and they've got these prop firms way up on a pedestal, and if they don't get funded, or if they lose funding, or if a prop firm goes under, they think they're at a loss in that type of situation. But the truth is, when you build yourself up into a consistently profitable trader, you're the asset. And really, if a prop firm goes under, it's their loss because they're losing access to a successful, consistently profitable trader, and they're losing that access. So it's not you at a loss, it's them at a loss. And the truth is, money and funding is abundance. There's no shortage of money and funds in this world. So when you have the skill as a consistently profitable trader and you're the asset, you're going to be able to get funding and money from anywhere, whether it's through private investment, whether it's through other firms, whether it's through prop firms, it doesn't really matter. So what I'm trying to promote in the mindset of my clients and students is with all my content, all my YouTube videos, is this abundance mindset. That it's not the prop firm that's the asset, it's you that's the asset. And if a prop firm goes under, it's not your loss, it's their loss. And the one thing these prop firms will never be able to take away from you as a trader is your skill to come to the market and consistently execute in the market and make money from that. And the truth is, the thing that the prop firm offers to you is abundant. The money, the funding, you can get it from anywhere. So what I'm trying to encourage is this mindset, this abundance mindset, that focus on developing yourself into a consistently profitable trader, because when you do, the funding is abundant and you can get it from anywhere, really. The next thing here is I'm really encouraging this expansion in their vision for themselves. There are so many traders who all they want to do is become a funded trader, $100,000. That's in their mind, that's the end goal. And when you have that vision for yourself of, I just want to be a funded trader with one company, just have $100,000 account, then losing a funded account or a prop firm going under is a devastating event because it pretty much tarnishes your whole vision that you've had for yourself. But what I'm encouraging traders to do is to expand their vision or expand their goals and hold themselves accountable to see things bigger for themselves. And instead of just having one $100,000 account with one prop firm, what I'm encouraging them to have is, diversify across 5 different companies, have $500,000 or $200,000 accounts with 5 different prop firms, and expand your vision for yourself as an individual, as a trader. And don't set the goal of being a $100,000 funded trader with one company. Set the goal to have 5 different companies, prop firm capital from each of those 5 companies, have $100,000 to $200,000 in funding with each of those 5 companies, so you're diversified. But don't stop there. Then set the goal of consistently managing those 5 accounts once you've picked them up, to consistently trade them for the next 6 to 12 months to build a track record. And then once you have that track record, use that track record to go and pitch private investors to then diversify into private investment and have more diversification to your capital. So now in your mind, your vision isn't just to be a $100,000 funded trader with one company, but your vision is to have 5 different prop firms and multiple different accounts with each of those prop firms, and then to trade that capital sustainably over a long period of time, and then use that track record to go and build a bigger fund with private investment and take it really seriously and treat it very professionally. And those 2 different mentalities, the trader who's more diversified and has a bigger vision for themselves, if one prop firm goes under, relative to their overall vision in their mind, it's not the end of the world. But the trader who's just focused on that one firm and wants to get one $100,000 account, it's the end of their world, because that's what they see for themselves. So it's about putting this in context in the larger vision, in the larger vision for yourself. Losing, your funding with one company, even though you may have already had all your eggs in that one basket, with that expanded vision, with that new set of goal for yourself, put it in context to that, and that can minimize the effects it has on you. And really, that's what I'm encouraging traders to do. Don't put all your eggs in one basket, especially in the prop firm industry. Focus on diversifying across multiple different prop firms, have multiple different accounts with multiple different prop firms, and then really focus on trading that successfully. Because prop firms are still a great option, but you have to recognize that some of them do come at a risk, and trade those successfully and consistently, and then use that track record to go on to bigger and better things, private investment, that type of stuff, and start building out your firm and your fund. I guarantee you, if you expand your vision for yourself as a trader, and then you put the loss of 1 or 2 or 3 funded accounts relative to that bigger vision, it's not going to have as much of an impact. The next thing here is to recognize that there is no such thing as a free lunch. And there are many traders, I hear the language all the time. Traders are saying, it's easy money, it's quick money, it's free money. Truth is, everything comes at a risk. Every reward has a risk. Every benefit has a drawback. Every support has a challenge. Every goal you have is going to have underlying risks that you have to be aware of. Now, if you're not aware of them, doesn't mean they're not there. They're just hidden. They're unconscious. And you may go and accomplish a certain goal that you think is all positive, and then it won't be long for you to find out the reality of that goal has 2 sides. It's got risks, it's got drawbacks, it's got disadvantages as well. So for the longest of times, I've been promoting to my clients and students that you have to be aware of the risks. You have to be aware of the drawbacks. You have to be aware of what could go wrong, and be aware of that in advance so you can plan and prepare contingencies for those scenarios. For example, one of the classical ones with prop firms is, one of the risks is I could go become funded with this one company, and then that one company could freeze my accounts, or they could go under, or they may not pay me out. These are sometimes the risks around prop firms. And what you can do is you can recognize that I want to stay diversified. I want to not only put all my eggs in this one prop firm, but I want to diversify. I'll start with one, then I'll move on to this other company that's maybe in a different regulatory environment, in a different country, in a different continent. So I'm diversified. And then once I've got one with that, I'm going to go to this one over here. And then I'm going to build up 5, right? So what you're doing is, with foresight, you're already recognizing the risks. You're mentally preparing for one of the risks, which is that it could go under. But I guarantee you, the traders that were hurt most by prop firms being taken away from them, or accounts frozen, or funds not being available, or that prop firm going under, are the traders mostly who put all their eggs in one basket, and they had this mentality of this all positive expectation on the prop firm, and they were thinking about how good, how positive, how beneficial it would be, and they had that pride or that infatuation humbled by that scenario. The traders who were most pained by the loss of their accounts were the traders, in my opinion, from what I've seen, that were only seeing the benefits. They're only seeing the positives of the prop firm. You have to have this level of healthy skepticism, especially in this industry. You have to be healthily skeptical about what could go wrong, what are the risks in this scenario, and then plan and prepare for them as well as you can in advance. And ideally, you're staying diversified. That's really the big one here. But always be aware that there's no such thing as a free lunch. Everything comes with a risk. Everything has a drawback. And if you're not aware of it, doesn't mean it's not there. It just means it's unconscious. So you have to go in there and find them. Now, moving forward, what I'm really promoting and encouraging to my students, to my clients, is still use prop firms. They're a great option. Just recognize that they come with a risk. They have a disadvantage to them. And you want to be aware of those risks and drawbacks as best you can in advance, and plan and prepare for them as best you can. Put contingencies in place. If this happened, this is what I do. If this happens, this is what I do. And mentally prepare and understand that prop firms are a still great option, because they're a very low risk way to get access to larger and larger capital, but they do come with a risk. Sometimes they could go under. And you have to mentally prepare for that, and all the time you're trading that, have that level of healthy skepticism that this could happen, and be prepared for scenarios like that. Okay? So first and foremost, focus on becoming the asset. Focus on developing the skill of a consistently profitable trader. That means identifying an edge, putting that edge into a mechanical trading plan, mastering your psychology, fear and greed. Really, that's a huge component. And then focus on consistently adhering to your trading plan with a balanced psychology. Those are the 4 steps. Focus on implementing those 4 steps and developing the skill of becoming a consistently profitable trader. If you need help with that, I've got resources in the description, free resources. I've got a free trading plan template, which you can use to help you put your edge into your mechanical trading plan. I've also got a free mindset tool, which will help start the process of mastering fear and greed. So my suggestion is focus on becoming the asset. Because once you're the asset, you get money from anywhere. And then the next thing here, expand your vision beyond just prop firms. Set goals, set bigger goals. Focus on recognizing that becoming a funded trader with one prop firm, you don't want that to be the end vision in your mind. You want a bigger vision for yourself, multiple different prop firms, multiple accounts, and even beyond that into private investment and setting up your own firm, setting up your own fund. And guarantee you have a bigger set of goals, and these smaller events won't have such a big impact on you emotionally. And then thirdly, have this sense of healthy skepticism moving forward with prop firms. Recognize that prop firms do carry risks just like anything in this world, right? Trading your personal capital has risks and drawbacks. Trading prop firms has risks and drawbacks. Trading private investment has risks and drawbacks. Not trading at all has risks and drawbacks. Everything has 2 sides to it, an advantage and a disadvantage. You want to be aware of both sides of the equation. You want to plan and prepare for the risks and drawbacks and for everything that could go wrong. And you want to utilize prop firms as a tool to help you accomplish your ultimate vision as a trader. Okay? So this is what I suggest moving forward. Take these insights on board and I guarantee they're going to help you. All right? I'll see you all in the next video.